Hey, Slick Talkers, thank you so much for tuning into this podcast. And I know that if you love this show, you'll also love my morning show called Good Morning Hospitality with my co-hosts Michael Golden and Brandy Canali, as we spend 30 minutes every Monday morning to dive into the industry's top latest news and trending topics. So go check it out on wherever you find your podcasts at Good Morning Hospitality. And you can live stream with us on Monday mornings on LinkedIn, Twitter, Facebook, and of course, YouTube. Now, I hope you enjoy this episode.
Hospitality means putting other people's needs above our own and delivering great experiences, whether somebody's on vacation or on a business trip, and taking care of the basics, but also looking to surprise them and delight them in their stay with us.
Welcome to Slick Talk, the hospitality podcast where we discuss all things hospitality, hotels, and business. You can find us online at slicktalkthepodcast.com and on every podcast listening platform.
In hotels and vacation rentals, the top complaints or issues are noise, garbage, and parking. I may not be able to solve all of your parking and garbage problems, but I could definitely help with your noise problems. And that actually might just help your garbage and parking problems too. So NoiseAware is the only 100% privacy-safe noise monitoring solution that property managers and owners can use in order to ensure they avoid parties and other issues happening at their property. You won't get notified when a plate breaks, but if you have a little quiet get-together that kind of gets out of hand, like this, then NoiseAware will give you the peace of mind to ensure that you and your property, and of course, your profits, are protected. So use my code SlickTalk20 to get 20% off of all noise monitoring devices and focus on the other important things that help you run your business. Now, thank you for checking out Slick Talk, the hospitality podcast. Get back to the episode, and don't forget to check out NoiseAware while you're listening. All right, everybody, welcome back to Slick Talk, the hospitality podcast. I'm your host, Will Slickers, and I know I've been getting used to saying the same phrase over and over again. If you're listening to the show, it's another great day. It's another great week because we have another great guest. So get ready because we're diving in to learn more about Vector Travels and what they do in the industry, the certain unique model that they have going on. And joining me today on the show is Mickey Kropf, who is the co-founder and CEO. So I'm really excited to have you on, Mickey, and thank you so much for joining me today.
Yeah, thank you, Will. Excited to be here.
Yes. Well, I think to give the audience a little bit of a background, the first time I really got to meet you, more like see you, but was through the Return on Rentals event hosted by NoiseAware, and getting to learn more about your business and how it all started. But when I was hearing you talk about that, I was like, dang, this would be a really good episode, and figured after we both were super busy and everyone was kind of just trying to get back on their feet from COVID, now is a great time to have you on the show. So if you don't mind, let's just jump right in and tell us a little bit about your background, how you got to where you are today.
Sure. So I was a baseball player that opened some doors for me. I got to go to a really good college and then washed out of minor league baseball relatively quickly and had to decide, what the heck do I want to do with my time now? Something that used to take 6-8 hours of my day was gone, and I needed something to fill that void. And I actually gravitated towards real estate pretty quickly. I had an older brother that was working in it in development, and I think it was partly born out of the fact that I didn't know what I wanted to do, that real estate was so appealing because there were so many different facets to it. Even in development, which is where I started and kind of spent my 20s, there's everything from the idea around the development, then there's the design, then there's the financing component, then there's the actual construction element where you get a physical product at the end of the day, and then whatever your business plan is, but you've got to monetize it some way, whether it's selling or leasing, and that was really appealing to me. And I really just spent my time in my 20s until about age 30 cycling through different commercial real estate primarily, but usually a residential component, development jobs. And then one of those jobs was commercial real estate financing. So mortgage banking within commercial real estate. And we underwrote hotel deals. And honestly, that's where all of this comes from, was going back to 2012. My co-founder at rented.com, or what would become Rented, called me up, a friend of mine from college, Andrew McConnell, and said, hey, I have this idea for a marketplace, short-term rentals. We'll have managers compete to manage the inventory. They'll have to purchase the rental rights, essentially, was what we cooked up. They were leasing the units, right? but that's what we came up with. And that launched me on this journey. And, back in 2018, I left rented.com to co-found Vector Travel, mostly because we saw a gap in the market. We saw within the apartment industry, nobody was doing what Vector now does. And here we are 3 years later, thankfully.
Yeah, thankfully, seriously. And that's a big statement, especially because of the last crazy year that we've all been going through. So I think it's really cool. And it tests like the overall model, because you guys are a revenue share model versus a master lease. Which I found really interesting and really exciting because for so long we've been, there's companies, that are like Sonder or whatever that usually do like a master lease model. And we saw a lot in the beginning of COVID not really make it through. And now to show that it can be done on a rev share, like a proper rev share model is really exciting. So I wanted to dive into what were the moments leading up to, I guess, creating this, knowing that it would be like the most sustainable way for you guys to continue as a company?
Well, I have to say at Rented, we had a Rented capital fund at some point, and we were out there leasing units, essentially, buying the rental rights, but and some of that was in the apartment industry. And I realized then a few things. One, it was just so nascent, the industry, that the data was not necessarily reliable. Even in bigger markets, there wasn't great density of professional operators. So you're sort of doing swag guesses left and right on those things. But you're having to put real money to work to learn. Basically, is this going to be a viable property that, it's hyper local. So you got to get it right. You could say it's this zip code, but if you're on the wrong side of the tracks, or you're not walkable to this or whatever, you could really get that wrong in terms of your returns. So it was just so early. And then, really there were just other concerns about the model in general. I think living it a little bit, you start to think it through and you say, all right, if we do this, then and we are profitable, doesn't that then invite competitors to do it? Not that there's anything wrong with competition, but given, again, point one, that it's nascent, are we going to have the supply and demand kind of out of whack at any given moment? And, oh, by the way, we were doing whatever we were doing, 10, 20 units at a time, but already Sonder, Stay Alfred, Lyric probably, at least soon thereafter, they're taking down entire buildings, or they're taking down half of a building. And so they're really moving the market at any given point. And then you're not to mention just arbitrage theoretically is supposed to go away over time for various reasons. And so I just saw a lot of flaws there. Then when I put myself in the shoes of the real estate personnel, because remember, that's what I had been too, you start thinking like, all right, we are getting these leases. They're supposed to be safe, but really, how safe are they? These are all still relatively early stage businesses. And when you have that much exposure to any given tenant, well, that's kind of a problem. And that goes back to those commercial mortgage banking days, underwriting those deals and realizing that. And so I said, wait a second, even though there's nothing certain with a revenue share model, it is tried and true. This is how the entire vacation rental industry works. We were always selling against that, essentially, at Rented back in those days, but and trying to show them the other way. But that is how it's functioned. It's been around for hundreds of years. It's a proven model. That's how hotel management works. It's even how long-term rental management works within the apartment industry. So I don't know. We didn't know if it would work in terms of adoption by the multifamily industry, but we knew the model worked, and so we just set about building it. Yeah,
no, it's definitely like the proof of concept is already there. The wheels already work, and why change it when it, if it's not broken, why fix it, right?
Right.
Yeah, I love that. And so I guess that definitely opens up the door in the conversation of what was with getting into the apartment building and the multifamily space, introducing this rev share model compared to what they're normally used to seeing with corporate companies coming in and just owning these leases and giving them these long-term, like either 2 or 3 year leases locked in, guaranteed, all that type of stuff. What was that battle like for you? Because I think this is one, I'm hoping this is one, like you guys, the pioneers paving the way for a lot of other people that can learn from what you guys are doing, because I think that, like you said, it's tried and true. So why mess with the model that's not broken?
Well, yeah, but I guess I'd take it back to my baseball days. I was a position player where you fail more than you succeed, and even if you're great, you're doing that 3 out of 10 times, right?
Yeah.
We've lost so many deals. We've lost so many opportunities from what I call stakeholders not at the table because the model is different, because there's no lease, because the payments that they're going to receive are not set, even if they may be in excess of what the leases would be.
Yeah.
It's still sort of square peg round hole, if you will.
Yeah.
And so that's a constant challenge. And I don't know if we're ever going to change the multifamily industry in that regard. But what I can say is, again, like you pointed out, here we are, post pandemic, we're still standing. Some of those corporate lease model short-term rental companies are not. But furthermore, the owners and property management companies that they leased from have been through that experience. So they've been through one major downturn. That one happened to be a pandemic, but the next one could be a depression, or it could be something else that triggers it. And I think what they're seeing is, okay, this is a resilient model. I mean, I wish we were bigger than we were when the pandemic hit. So I have more of these success stories, but I do have a number of clients who months into this said, hey, we had exposure to some of those lease ARB guys, and then we had you guys, and you guys paid us on time every time, throughout the pandemic, and things surged back for us generally May and then onward. I mean, yeah, ADR wasn't where where it would have been or where we wanted it, but we kept the money flowing, and we kicked the can down the road until this year where things are great again.
Yeah. And that's the thing. You make a really good point, is that the cash flow is there because you have the flexibility to let it be there. You don't have all this, high already like entry level to continue to operate. I almost had like a stroke there. But I love that you're also talking about the just the overall, like, I wish I had more successful stories to share with that. But I think it goes into the entrepreneur journey of, the iceberg analogy, where it's what they see, what they don't see, like all the struggle, the hard work, the long nights to the nose, all this other stuff, versus the small mountain peak of success that shows through, and the years it takes to get there. For you guys, I want to kind of like dive into your overall operations. How does that work with multifamily? Because I'm assuming you guys are taking in 10 units, 20 units, 100 units in at a building, or are you guys spreading throughout a certain geographic and market?
Yeah, well, I mean, I think being a little bit funny here, but we take what we can get. And that's, so our thing is it multifamily? Ideally, is it a client we can scale with? And then do we stay true to our model in terms of the deal that gets struck, our management agreement? And if it's those things, and a fourth thing would be, is it legal? Can we run these as we want? Then we go anywhere. And so it's a very client-driven business at this point. Soon we're about to kind of turn our sights into penetrating some of the more successful markets that are regulatory wise, kind of friendly to what we do. But to date, I mean, we generally just find a way to say yes, and we try to set up the units really quickly, deliver value. And again, our value is generally, let's turn your vacancy into cash flow, whether it's a brand new building or a stabilized asset that just has some challenges. And we do that wherever is needed. Our men's, well, I guess I'll say our average unit count is in the 12 to 15 unit range per multifamily building. We also work a little bit outside of just pure apartments, more destination markets. That's a little more dense, and I think that's more understandable. But yeah, I think going in there with that more of a flexible approach, focusing on their needs more so than ours, just saying, hey, we're a tool. We're an avenue to this income stream. And it's hospitality, it's transient, there are the downsides to it. But if you can get on board with those things, we do everything that we can to be a really good partner, have all of the best practices in place, and we deliver. And we just make it a habit to do that every month.
No, exactly. And I love that because there's a little bit of an educational part to it. Like, I'm assuming since you're on the return on rentals event that you guys use Noise Aware and all this other stuff. So like, you have these tools in place to kind of help ease that mindset of, what if you get a bad guest? What if you get someone that trashes the place? What if you get noise complaints, whatever. And so I never actually thought about it though, because like for me, I'm on the single family home side. Like, so always dealing with one-off homeowners or even maybe a small person who's got a nice business and they buy second, third, fourth, fifth home type deal. So rarely do we have someone that has multiple units. It's usually one owner per unit, maybe one or two. So you guys are dealing with corporations basically, or bigger. I guess what would they be like? More? Would they be corporations? Would they be individual?
Yeah. So, I mean, some of our clients now that we've had for multiple years are multi-billion-dollar corporations, and we're not one, right? And we're bootstrapped. We haven't raised. We don't intend to raise at least venture capital. Maybe we'll raise some other form of capital at some point here. But yeah, that is different, and I think that is one of the benefits around what we do. We're sort of, I say it like we sell into scale on the supply side of our business, and yet, going back to the operation, given that we're only 2% or 5% of an asset, or probably far less of an overall portfolio. It also, you got to do it the other way too. It's like, well, how much does this income even matter to some of these, potential clients or corporations? And the answer is not very much. So that means you got to be really good operationally. You got to have no BS, or when there's BS, because there invariably is. I should say it this way: you've got to respond really well, and have all of the best practices in place, like a noise aware, where you can go back and you can see, okay, was there a noise event and we missed it? Or no, maybe this is a false positive. Maybe this is a resident who just doesn't like this activity. We use auto host for guest screening. Yeah. We have great liability coverage in case it all does hit the fan at some point, and 24/7 support. And we're doing everything we can. Key Cafe or links for access. So that's kind of the operational, guest facing, but also, the things that matter to clients in terms of the operation.
Oh, that's awesome. And that was actually my next question, was kind of going into the operation standpoint of, if you're in these buildings, and most of them either have like the, I don't know what they're called, like the doorbell with
controlled access buildings. Yeah.
Exactly. How do you guys manage around that with your own tech stack? Do you have to kind of be pretty flexible with how you get those operated, or because those can be pretty demanding if you have someone calling all the time, right?
I mean, it just depends. But even with links, we can often solve for some kind of an access code to the building or to the grounds, and then they'll just wayfind to their unit and get in with their own unique code. Otherwise, if it's like the Key Cafe solution, we might put that somewhere where it's just. It's covered but accessible, and there's almost always some place to do that, whether it's a lobby or, I don't know, a parking deck type scenario. That's not usually great for a signal, but yeah, we usually find a way. Yeah,
that's interesting. As our Slick Talk listeners know, there's a lot of behind the scenes work that goes into preparing and maintaining short-term rental properties. That's where Breezeway, best-in-class property care and operations platform, comes into play. Their easy-to-use tools help you automate, coordinate, and communicate detailed work at each of your properties so you can deliver the best experience to guests and homeowners. Breezeway integrates with over 30 PMS systems and IoT devices, meaning you can easily harness property data from your entire tech stack to build stronger programs for scheduling, quality assurance, guest texting, owner reporting, and much, much more. Visit breezeway.io/slick to learn more. Now, back to the episode. What's it come down to on your guys' end, having like multiple inventory in one building? How, with revenue management, how do you guys handle that? Do you just treat that as one single room type, or are they all pretty unique that you get to play around with certain rates and adjustments and length of stay and all that stuff?
Yeah. I think it's probably closer to how a hotel runs it. So there'd be a room type, but not typically to the point of like this one's view is east facing and this one's southeast facing. And is that going to result in any kind of difference in the rate? I mean, that'd be nice, but I don't think we're necessarily there. I will say we're there if we can figure it out. If we have a historic trend and we see, okay, there's the ability to capture $5 more here, then we will. But yeah, it's more around room type, and then we have moved to more like clustered listings, even on Airbnb. Since that's been an opportunity for us, and that helps, just given our model that there's some density in the same building. But yeah, the challenge being in some of those markets, are there any comps? Where do you price it? Do you have to look more towards the hotel industry? If it's a smaller, tier 3 type market. But again, you figure that out and you kind of learn as you go. And we take a real kind of incremental improvement approach to everything we do, and including revenue and channel management. And if there's something anomalous about a given market, and maybe booking.com is only 15% of bookings in most markets, but maybe for some reason that one needs to be 50%, and then we'll just pull the levers that we can to do that. But yeah, I'd say every building gets its own sort of bespoke treatment, and every floor plan does to a certain extent.
Okay, interesting. And I was going to ask, like, with all of that going on in the background, do you guys look at the hotel side of like inventory on how it's fluctuating with events and other stuff like that? That's one thing I've always kind of found interesting. For some single family home operators will totally pretty much ignore what hotels are doing because the inventory is obviously a lot different. But with the multifamily side, do you guys do that, or is that?
We do. Yeah. We try to track, well, I mean, it's a strange time. It's still coming back, but track local events in a market, track historical data around that. Sometimes that's publicly available information through convention centers or just local kind of travel bureaus. Even chambers of commerce can put some of that out. And then, you do have to understand that the hotels are different. They've got a really robust group sales function typically, and long-standing relationships. They may have the brand cachet that we don't at this point. So we are a little more reliant on OTAs and direct bookings versus any kind of like B2B direct relationship, or just being plugged in as a corporate partner to some event. But yeah, we've also been surprised to see that our inventory is, in demand. And I think even, single family home managers in the right markets would actually benefit from tracking that and then having some of those relationships in place as well. Yeah,
definitely. And what markets are you in exactly? I don't think we actually kind of covered like the geographic location. Where do you guys mostly operate? Or are you pretty spread?
Yeah, we're in about 30 markets now. It's not always a great presence in any given market, but Texas probably has the most density, like every major city we're in, plus like Corpus Christi, for example. And I think if you go back to the prior question, it makes some sense. Texas is pretty pro-business and generally pro-short-term rental. And so we anticipate having a long-term presence there.
That's awesome. Well, I want to get to more like the founder entrepreneurial questions for you, because not raising capital, not having like any kind of Series A or any kind of raise at all for this, being bootstrapped, what have been some of the I want to focus on the positive stuff, like the positive challenges that have helped you guys grow, because especially being in like 30 markets, I'm thinking about the direct brand, the direct booking type consumer type stuff. But what have you guys like been realizing with your brand overall as you've been growing, bootstrapped, and learning these lessons and going through this, especially this crazy COVID-19 stuff going on with every closures and restrictions and lack of travel versus the boom of travel and all this stuff? I'm kind of curious to see what you guys are learning on a positive aspect rather than a negative one.
Yeah, well, I mean, look, at one level, we sort of say this internally, half joking, but we can do whatever we want. So there's no VC driven board that's saying, Mickey, damn the pandemic, grow by 100% this quarter, right? We were able to say, all right, what's the most prudent thing to do? I mean, basically run it like a real business, for crying out loud, right? Think about margin, think about protecting your staff, think about when the time comes, growing again relative to competition, but do it in a smart way, not just hey, I've got 10 bets and one of them is going to be a hyper growth winner, and I don't really care about the rest of you. Get out of my way if you are to fail. So I think that is one of those things, and so then that permeates the entire culture, in my opinion. That anybody feels like they can bring forth a new idea, a new process, some new approach, and more than likely we're going to try it. We're going to find a way to give that outlet to the employees. And I think that that's a really fun thing about what we've been able to do here. And there's been a lot of trial and error over, it feels, 3 years in a startup, it's like probably 9 years at a corporation. It's just things move quickly. You got to learn quickly. You got to, try things and then kill things pretty quickly, and then do more of what works. I think that that's probably the biggest and best thing about what we're doing. And then, we can set the values as we want to live on a daily basis. And so the way we've chosen to do that is to say things around incremental improvement, because I like that. I like reading new things and trying new things. And then I want to attract people that I want to work with. They also happen to think like that. So we have this culture of getting better, just small incremental improvements, again, whether it's process or person or technology or whatever it is, but doing that on a regular basis. And then you mentioned direct bookings. Well, that's one of the things that we're looking at right now. We have a pretty small minority of our bookings come directly to us, and we say, all right, let's change that. And so we're trying different things right now. One thing we definitely have to do is develop a new website. That's in the works. But that's the downside of doing what we're doing. You're resource constrained at all points. And so you're really making trade-off decisions, and you got to go with the thing that is the highest impact, best ROI, and best IRR, really, take that time return component into the equation. But yeah, man, I don't know. It's certainly ups and downs all the time, but it's extremely fun, extremely rewarding. I'm glad to be in fast growth mode again, but only doing it because it made sense to, because the market was back, because clients were demanding it, and ultimately consumers who pay all of the bills, right? Yeah. All the guests pay all the bills. They're willing to pay again. Yeah.
That's true. And that's kind of cool though, because now you have these clients that you've been working with for, whether it's been the whole time or either recently throughout the pandemic. Mm-hmm. And as they're growing, so they're probably doing a lot of the quote unquote owner acquisition for you when it comes to, they get new properties and they're saying, hey, this is working. We want to diversify this building instead of just being full leases. Let's give you, a good portion or a percentage or whatever of inventory. So that's kind of nice. Sometimes, like, as you're going to grow and you're searching for new units, sometimes they might just approach you guys, right? Like, I'm assuming that happens.
Absolutely. Yeah. Your best new client is your existing one, or some version of that cliche. And so, we work really hard to service our existing clients, to communicate with them, to deliver, based on their needs. And when we're not, to tweak things and hope to ensure that we do that. But yeah, I think whatever segment we're working in, I think we're always secondary, and I think we have to know our role essentially. And I actually think that is liberating a little bit. Now, if you were doing pure vacation rental management with an owner that doesn't want to use it, they're all about returns, it's pretty clear what your role is. Maximize rental income, minimize, impact on the asset. So be a good steward, run a tight operation, take good care of it. With us, it's not always clear on the front end. It might just be something they want to try for some other reason. They may want to, do it as a pilot for something they're going to do on a much larger scale. It may be that they don't have a good rental program at all if we're outside of the apartment industry, and they really need somebody to hyper focus on just driving total revenue, driving RevPAR essentially. So it kind of starts in the sales process. There's a discovery there too, around how we're going to tailor what we do. We don't really change a whole lot. It's more about like, how aggressive are we in what we're going after? How tight is the guest screening, or how low do the min rates go? Because if you can widen that a little bit more, then you can drive more revenue and so forth. Yeah, that makes sense. And actually, you just kind of brought up a question I had for operations. This has got to be not like a logistics like craziness, but it's got to be somewhat crazy if you're in this many markets. Do you guys normally like contract cleaners or maintenance, or do you have this all in-house where you're able to operate on the ground level for turnovers and all that other stuff? I'm just kind of curious on that. Yeah, well, I think that's one of the things I have learned too in the last year, is that is really the thing that matters the most, is the in-unit guest experience. And that is probably the hardest part of the business. And still, and yeah, we do have local personnel in those markets. It is a mix. Some markets, if we don't have great density, then we're using a third-party cleaning company, and then we're overseeing them, and then doing other things like supply ordering and auditing the cleans and communicating with being a liaison essentially to the on-site team. In other markets, it's completely in-house, and we would love to bring it completely in-house, even though some of our cleaning contractors, like I'll plug one called Clean Suite, out of Austin, but in every market in Texas, probably up the East Coast now. I think they're in Florida too, in the Miami market. Absolutely great cleaning contractor. Don Haga is the guy's name, in case anybody's listening and needs some help.
I've been hearing that name.
But otherwise bringing it in-house has been a dream. Honestly, we're giving solid jobs. I mean, yes, they're that tier of a job, but we're paying living wages. We're giving benefits to the local manager, and it feels good. And by the way, it's improving things. We have consistency. There's no turnover per se. The cleans are there every single time. The supply management is tight. Yeah. And if you need that first, right? That's like the blank canvas for that excellent stay that is to come, and all of the revenue management, all of the tech, every app you may have, none of it matters if the unit's not clean. Yeah. Yeah. So we're working pretty hard on that front.
No, that's really awesome. I love that. I think that's really cool. And I think I was talking to, who was I talking to this morning? I think it was Skyrun. So Skyrun Vacation Rentals, talking about the global brand with the local touch and flair, right? So being able to have that local operator, but then also having a brand name to it that's on a global scale, so to speak, for at least the U.S. And so I think that's really awesome to have that ability to start growing that segment. I think that's going to be a big impact for you guys. No, that's awesome. That's really cool. There's so many new things that go into, because just being like, granted, we're both in the same industry, but having single family versus multifamily versus lease agreements versus non-lease agreements and all this other stuff, it goes into a lot of conversation. And for you guys, you have like minimum contracts for how long you have the units with your clients, or is that?
I mean, that's somewhat flexible based on the industry and also what goes into it on the front end. I mean, there's a deal we just signed where it had software integrations we had to do on the front end, and that's got a 2-year term to it. Yeah. I'd say, somebody off the street, it's kind of the vacation rental default of hey, give it an annual cycle, even just for practical reasons around seasonality. Other times we find a need to be a little more flexible around that, and that's okay with us too. Okay,
cool. That's awesome. And how do you guys do furnishing? Do you do the furnishing as in like staging and design and all that stuff for you?
Yeah, we do. Yeah, we run a kind of a setup procurement function and launch function. That's a combination of FTEs with us, and then just set up contractors that like to fly around with their tools. And we've done hundreds of units that way, and it seems to work for us. So when the work comes in, we get to work on that. That's
cool. Awesome. Well, Mickey, I really appreciate you taking the time to chat with me today and kind of diving into what you guys do at Vector. And I think it's really, like I said, when I first saw it on the Return on Rentals, I was like, yeah, this is going to be a good episode. I gotta get this guy on the show. So I'm really excited that you took the opportunity to chat with me today. It's been awesome.
Well, thank you. It was really fun.
My pleasure. So Slick Talkers, that I put everything in the show notes. Go ahead, check out if you're, riding a bike, if you're swimming, if you're doing whatever with all your waterproof headphones, check out the show notes, and look forward to seeing you guys again next week. Oh, go ahead.
Sorry, I think that was probably the last word, but I did have a special offer if anybody wants to travel to any of our stuff. So it's vectorstays.com, and there's the book now thing, and we've got a Slick Talk for 15% off. That's the coupon code. It's just on the checkout page, Slick Talk. And then if you happen to be, I'm sure you're not, but if you happen to be an apartment owner, 1 month free if you mention the podcast. One month management fee free.
Awesome. I love that. All right, Slick Talkers. Now you have a reason to get out of your house if you haven't already. If you're vaccinated or not vaccinated, whatever, go out there, get traveled, and go to stay at a Vector property using Slick Talk. I love it. I'm loving the plug. That's going to be really fun. I'll push that. Make sure our whole editing team knows to plug in that code on the show notes. That'd be great. Yeah, thank you so much again, Mickey. I talk to you guys soon, and we'll see you all the Slick Talkers again next week.
Thank you so much for listening. We love your support and want to provide the best we can to all our listeners. So please find us online, social media, and on Spotify, Apple Podcast, and Google Podcast.
As I've been growing my business and finding new ways to add to my property portfolio, I have to think about how I can anticipate the homeowner's needs, just like I do for my guests. One of the things owners always ask is, how is my property going to be protected? What happens if something gets damaged or worse? These are valid questions and concerns, and I have an opportunity to address these concerns before they even get mentioned, all thanks to having Safely as part of my toolkit. I can ensure all stakeholders are covered during a guest stay and use this information as a way to grow my business by ensuring my property owners know they can trust that I have them covered. If you're a professional property manager, then you need to get Safely in your tool belt so you can focus on operating and growing your business. Thanks for listening to Slick Talk, the hospitality podcast. Now, back to an episode. What's up, everybody? If you've gotten this far into the episode of Slick Talk, the Hospitality Podcast, then you are amazing, and thank you so much for tuning in. We want to send you two places really quickly. If you can, check out the show notes and click the hospitality.fm link. Check out all of our other shows on the podcast network. And don't forget, if you have someone that you want to hear on the podcast, then fill out the guest fill out form so that way we can get them on the show. Thank you so much for tuning in, and I hope you enjoy another episode of Slick Talk, the Hospitality Podcast.